Hi, this is Malhotra from Maple Wealth. In this video, I'm going to talk about the steps to planning for retirement. When planning for retirement, there is a number of steps that one should follow in order to ensure that you're not leaving anything to chance. So the first step when planning for retirement is knowing your number. And by that, I mean having an indication of what you are going to need in terms of an ongoing income to cover not just your fixed expenses, but also your lifestyle expenses. The best way to determine that is to look at what you're spending today, do a budget, and then go through those numbers with a fine-tooth comb to identify expenses that are not going to exist at retirement or may potentially reduce or may increase at retirement. So for example, typically at retirement, we'll find that medical costs and travel costs will go up, but potentially depending on your situation, the cost of raising kids or mortgage costs and things like that might come down. So the first step when planning for retirement is to know what your number is. The second step is, depending on when you're retiring, whether it's in 5 years, 10 years, 15 years, what you've then got to try and do is to try and project the future value of that number. So for example, if you have determined through your budget that you need about $55,000 per annum to cover your basic expenses and another $10,000 per year to cover your lifestyle expenses, then that means you know that you need about $65,000 per annum coming in at retirement for you to live the life that you're accustomed to. So the second step is, well, if you need $65,000 today, what is the future value of that money in 5 years, 10 years, or 15 years when you actually retire? So working out the future value of that money is extremely important because we know that the cost of living continues to rise. So if you're retiring in 10 years, you want to make sure that it's not just $65,000 that's coming in, it's the equivalent of $65,000 that you need in 10 years' time. The third step then is to work out what is the level of assets that you need to generate that $65,000 per year coming in year after year until your life expectancy. So for example, if you're 10 years away from retirement, you might be 55 and you decide that you want to hang up your boots at 65 and you need $65,000 per annum. In future dollar value, what is the level of asset base that will produce that $65,000 per annum each year, every year, from the day that you retire for as long as you're going to live or you're expected to live. Ideally, you want that size of the asset base to be big enough so that you don't have to sell down those assets and you can live on the income of those assets. The fourth step is to examine whether or not you're going to be entitled to any social security benefits and to incorporate those social security benefits in your projection. So for example, if going back to our previous example, if you need $65,000 per annum coming in at retirement, and let's just say you're entitled to a part pension of $20,000, then that means you need to have sufficient assets to generate the extra $45,000 so that the combined income from social security and from your own assets equals the amount that you need each year, every year for your fixed expenses and your lifestyle expenses. The next step then is to look at where can you minimize tax for the income that you're generating from your assets, because any money that you save on tax is essentially money that can help you with your living expenses in future. And then you need to understand if there is a gap between what you need and what you're going to have. Then you really need to make some decisions about whether you work longer, whether you increase your income, or you invest differently to cover that gap. I hope this video has been of value. The best way to plan for retirement is to sit down with a licensed professional who can help you understand what your number is, both in today's value and future value, and work backwards to ascertain the steps that are required for you to achieve that level of growth and income that you're going to need at retirement. This is Malhotra from Maple Wealth. Thank you so much for listening.